Imagine being told that your job's gone. And the worst part? It's taken over by a chatbot. Now picture the same bank deciding to actually bring you back just days later. Well, that's exactly what happened at Australia's biggest bank, setting off a wave of surprise, relief, and a powerful message that real people still matter even in the time of artificial intelligence. In August 2025, the Commonwealth Bank of Australia, or CBA, the country's largest lender, made headlines. It had planned to replace 45 call center employees with AI-powered voice bots. But barely weeks later, it had to reverse the decision. And this shift came after a trial backfired, an intense pressure from finance sector union, and a mounting evidence that human service in banking still remains indispensable. In late July, CBA announced that it would axe 45 roles in customer service following the introduction of an AI voice bot designed to handle simple inquiries. The bank claimed that it would reduce call volumes and enable the staff to focus on more difficult tasks. Importantly, this was the first known instance where a major bank explicitly cited AI as the reason for job cuts. The finance sector also criticized this move for replacing people with machines in the name of innovation. The union pushed hard, demanding transparency, workers' involvement, and evidence-based justifications. Instead of reducing traffic, the chatbot increased call volumes. The staff began reporting longer wait times, and the bank had to scramble, offering overtime to existing employees and even pulling in team leaders to take calls. The expected efficiency from AI simply never materialized. The finance sector union sees this failure as a turning point, highlighting that job cuts in the name of AI wasn't just ill-timed, it was simply wrong. By mid-August, the bank had publicly reversed its course. It offered the 45 affected employees the choices to either return to their role, accept deployment, or take voluntary exit packages. The bank also offered an apology, calling the redundancies an error and acknowledging the flawed assessment of workload and impact. A union representative called the turnout a backflip and a significant victory for the workers, albeit one that couldn't erase the initial shock and uncertainty. Test before replacing. Companies must test new AI systems thoroughly before they make staffing changes. In the case of CBA, management jumped too quickly from a pilot idea to layoffs without properly measuring how the chatbot would perform under pressure. A phased rollout with employees still present would have exposed the system's weaknesses earlier. Testing also builds confidence among staff who see the technology as a tool rather than a threat. By skipping this stage, CBA ended up embarrassing itself and losing customer trust. Engage stakeholders early. When technology affects jobs, the people most affected should be part of the conversation from the start. If CBA had consulted staff, unions, and even customer representatives, they might have foreseen many of chatbot's flaws. Employees could have shared insights about call types and customer behaviors that AI developers might overlook. Including stakeholders early also reduces backlash later because people feel heard and respected. Companies that skip this step often pay the price in public relations and credibility. Balance innovation with ethics. AI is powerful, but companies must remember that their reputation depends on ethical choices. Saving money should not come at the cost of mass layoffs or worse service. Banks in particular must be extra cautious because they hold people's life savings, loans, and financial well-being in their hands. Ethical innovation means weighing cost savings against social responsibility. CBA's mistake showed how quickly the public reacts when the balance is ignored. Adopt a phased approach. Instead of going all in with job cuts, CBA could have gradually introduced the chatbot while keeping all staff on board. This phased approach would have allowed them to compare AI results against human performance in real time. Staff could then be trained to work alongside the chatbot, creating a hybrid model where technology supports rather than replaces them. A gradual approach reduces risk and gives the company flexibility to adjust when things don't work as expected. Customers also feel less disrupted by small, careful changes. For banks, financial institutions worldwide are watching the CBA case closely. Many banks were already considering AI-driven layoffs, but this failure may make them reconsider. Instead of rushing into automation, they may now focus on hybrid systems that combine AI speed with human judgment. The incident is a warning that technology without planning can backfire spectacularly. It also pushes banks to build better safeguards before experimenting with jobs. For employees, workers now know that they are not powerless in the age of AI. The CBA reversal shows that unions, collective action, and public support can influence corporate decisions. Employees may need to reskill and learn how to work with AI tools, but they also have the right to demand fair treatment. The story empowers workers to ask for retraining programs instead of replacements. It also signals that the future of jobs lies in human-AI collaboration, not competition. For customers, the reversal reassures customers that their voices matter. When they complained about chatbots and demanded human service, the bank listened. Customers expect convenience, but they also want compassion, which only humans can provide. This incident shows that speaking out can preserve the quality of service people most value. In the long run, customers are likely to benefit from a mix of AI speed and human empathy, creating a more balanced service model. For AI companies, developers of AI tools now face greater pressure to design systems that actually work in real-life conditions. The chatbot failure at CBA damaged trust not just in the bank, but in AI technology overall. AI firms will need to demonstrate reliability, transparency, and accountability to win client trust. They may also need to work more closely with employees during development, ensuring that their systems complement, not replace human skills. For AI to be accepted, it must prove it adds value rather than chaos. The Commonwealth Bank of Australia's attempt to replace 45 customer service roles with AI-powered chatbots didn't just misfire. It was a turning point. After a chatbot backfired and increased call volumes, the bank issued a formal apology, reversed its decision, and offered the employees back their jobs and even better alternatives. This episode underscores a broader message that while AI has remarkable potential, human-centered and ethically grounded implementation is vital. We need to understand that the future of work does not lie in replacing people, but in smartly supporting them. Do you agree? Let me know in the comments down below. With that being said, this brings us to the end of this video. I hope you found it informative, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Until next time, take care.